Hello, everyone, and welcome to another episode of UBS Road to the Election and Election Watch series. Please join me in welcoming today's guest, Nadia Lovell, Senior U.S. Equity Strategist with the Chief Investment Office here in the Americas at UBS. Welcome, Nadia. Nice to have you.
Thanks for having me.
So we're sitting here because, well, one of many things, but one of the things that just took place this week was the first and only so far presidential debate between Vice President Harris and former President Trump. And obviously, we're going to reference that to talk about the things we heard that might impact our, viewers' portfolios, and maybe the things that we didn't hear. But before we do that, Nadia, I thought we could just kind of level set, looking at the markets as they stand today. There's a lot that's going on besides the election. Mm-hmm. So just give us kind of an overview of the equity markets and what you're really focusing on right now.
Yeah, I think what you're seeing in the markets is obviously the evidence of the very close race that's happening between Harris and Trump. The national polls kind of continue to flip back and forth. I mean, so far what we're seeing in terms of the prediction markets are giving Harris a slight edge, particularly after the first debate between her and Trump, where she is seen to have relatively the stronger performance. But markets themselves, financial markets, we aren't really seeing that lean one way or the other. Now, typically, yes, historically, you tend to see equity market volatility increase, and markets tend to struggle in September and October in a presidential election cycle, and then tends to rebound after that. So normally in September and October, you see a bit of a pullback, multiple contraction, and then post-election, you see a bit of a rally in November and December. Now, Anthony, volatility could be just a little bit more elevated this cycle because of what you alluded to. There's a lot of other stuff happening in the macro backdrop and some unanswered questions. We continue to have this narrative, this waxing and waning between soft landing, hard landing for the economy, and a Fed that is looking to be lowering interest rates and start that cutting cycle later this month. So that's what markets are more focused on right now. I think as things progress, you could see the market start to shift its attention a little bit more, but the race is so close to call that it's hard to put on election type trades. As you noted, that there are, potentially a few weeks left ahead of election day, and there are some states that will start early voting soon. Historically, what you've seen is, at least the last couple of cycles, you have seen election trades kind of start to lean in just a few weeks ahead of the election. But right now, it feels like it's still too close to call. So it will be more difficult to put on those kind of trades. But I will say, during the second quarter earnings season, we did hear from companies, though, that they are seeing, particularly industrial companies, delays in large commercial projects due to the macro uncertainty and also election uncertainty. So on the margin, there is some impact to companies and potential delay in some revenues associated.
Right. Yeah, I'm glad you brought up the idea or the concept of what we're really waiting to see what the Fed will do and what they will say over the next 4 months. And as you alluded to as well, there's 53 days between now and Election Day. Early voting starts next week in many states. And just to kind of remind our audience, and just so you're all aware, the prediction here at CIO, according to our Election Watch authors, is right now that Vice President Harris has about a 40% chance of winning with a split Congress, while former President Trump has a 35% chance of winning the election with a full Republican Congress. So just to level set that. So going back to the debate, we didn't really hear a whole lot from either candidate regarding corporate tax rates, which, as I know, is a concept and an idea that is very important to our financial advisors, their clients. But Trump did speak recently at the Economic Club of New York, and we have seen in writing the proposals from Vice President Harris. What do we know now that you would share with our audience, Nadia?
Yeah, so corporate taxes will be a focus, and there's been a lot of chatter around that. As we know, former President Trump has proposed lowering the corporate tax rate from the current 21% to 15%. He's also floated 20%. But at the Economic Club of New York speech recently, he did clarify a bit and suggest that lower 15% corporate tax rate will be only available to those that are domestic producers. Now, Anthony, it remains to be seen, what does made in America mean, And so there might be some complexities around that. Does that mean that if you have, components that might be produced outside the U.S. but assembled in the U.S., does that qualify? remains to be seen. So there might be some complexities and some challenges policing the implementation of this. He's also talked about expanding the R&D tax credit and also write-off for capital expenses. And so it feels that, again, details are vague, but some of these policies seems to be beneficial to those who produce products on U.S. soils and have research on the U.S. soil. Now, Harris has talked about lifting the corporate tax rate to 28% and also lifting the rate on corporate buybacks from 1% to 4%. Now, Anthony, there are a lot of moving parts and complexities when we talk about taxes, as we all know, from personal and corporate. But, you know, back of the envelope estimate suggests that for every 1 percentage point move or so in the corporate tax rate, probably has close to about a 1% impact on S&P profits. From a budget standpoint, a federal budget standpoint, the Congressional Budget Office has put some estimates out there suggesting that for every 1 percentage point move in the corporate tax rate, that probably equates to about $130 billion over a 10-year period in tax revenues. And so when you do the math on that, it's sort of that 7-point increase from 21% to 28% on the Harris plan, that's over $1 trillion in potential revenue. So this is why corporate tax will be a focus in the scenario if we have a sweep where one party controls the government, just given the sheer amount of dollars that are associated with this.
Right. And just even just to expand, and by the way, great rundown. Thank you, Nadia. And it's really important, I guess, to really, like you said, back of the envelope, doing a little bit of math just to kind of get a little bit of a sense of what it all means, because sometimes numbers can really just be numbers until you see it in a practical sense. But even on the individual tax front, Trump promised to extend his 2017 individual tax cuts, while Harris said she wants to extend those for everyone except top earners. So they're almost a little bit aligned in that arena as well. Here's the thing I think that keeps coming up in conversations that we have with our colleagues and our advisors is these potential tariffs that former President Trump is talking about, 20% across the board, 60% on China. And then you have arguments on both sides saying it's a great thing, it's a bad thing for consumers, it's good for consumers. What are your thoughts, and what are CIO's thoughts on these potential tariffs that he's proposing?
Yeah, tariffs is something that we're closely watching. As you talked about, you know, Trump has, I think what's different between these candidates, tariffs are really here to stay. Let's just level set that. I think what's different between the two candidates, it's one has talked about a universal tariff. Trump has talked about a 10% across the board. It's at least 60% on China. He's even floated 20%.
20, right.
And then Harris, again, probably tariffs will be more selective and targeted. In terms of, you know, CIO has put out a report recently under the Election Watch umbrella discussing the implications from an economic and an investment standpoint of higher tariffs. And then when we have done the math on this, looking at this from a 10% universal tariff standpoint, think about it. The U.S. economy imports about 11% of nominal GDP is U.S. imports. So that's a little over $3 trillion of imports annually from the U.S. So when we do the back of the envelope estimates, we think that this would be inflationary if we have a universal tariff, probably about price levels lifting by 1.3%. It also probably means a drag on economic growth, 1 to 1.5% over a 3-year period. And when you think about that translate into S&P earnings, what does that mean? It's probably more a mid-single digit drag on S&P earnings. It's always difficult to know how the market is going to react to something, but we think that the market will probably draw down on at least 10% if we do see a universal tariff. Now, the more selective tariffs, less of a drag there. But to level set again, this came up in the debate that tariffs is not just a Trump thing. You know, the Biden-Harris administration left a lot of the tariffs that were implemented under President Trump, under the first President Trump, in place, and actually have even added to them in terms of tariffs on Chinese EVs, solar cells, as well as advanced batteries and medical devices, just to name a few things. So this is going to continue to be an issue, but we think that this could be a 10% drawdown. Now, the companies that could be impacted the most are probably those that, one, have supply chains abroad. And when you think about those are semiconductors, those are retailers, those are auto manufacturers, and some industrial companies. So, Anthony, this is one to watch because it could cause some volatility in the market.
Yeah, absolutely. And like you said, the market is paying attention to everything. How they react is a whole other potential scenario. But we all know the market does not like uncertainty. So hopefully, whatever the results are, we'll have more clear guidance and direction from the candidates. The last thing I want to ask you, Nadia, because going back to those scenarios that our colleagues in CIO have painted with the 40% and 35%. It also comes with expectations for individual equity sectors, and that's, of course, your true area of expertise here as the equity strategist that you are. Given what we know and what the scenarios and the pictures that are painted, and look, at the end of the day, we know this is an extremely tight race. It'll probably be so until the bitter end and maybe even after Election Day. What can you tell us about some of the standouts and some of the proposals and how they might impact individual sectors?
Yeah, outside of tariffs and corporate taxes, of course, that we're watching,
right.
Some of the other things that we're watching more recently, you've heard both candidates talk about housing and what they could do around housing. You've heard talks about freeing up federal land for new construction, also reducing regulation to help lower the cost of housing. You've heard Harris talk about a $25,000 assistance for first-time home buyers and a $10,000 tax credit. Trump has talked about the potential of lowering mortgage rates. Again, still not clear about how all of that's going to happen, but what it does sense that we do know that there's a housing problem in the U.S. around housing affordability. It's more also a supply issue than a demand issue. There's clearly strong demand for housing. But these sort of proposals, if they do eventually get through, could be an incremental positive for those companies that have exposure to housing. The other thing, of course, we're watching is tech. We know that tech tends to be caught in the crosshair of a lot of things. There is bipartisan support to continue to protect American advanced technology, particularly against China. But you did hear at that same economic Club of New York speech that Trump gave, the talk about the need for America to dominate in AI. And I think that you will hear that from both parties, and also highlighting that the electricity that's required for this is probably 2 times more of what we had today. So if there are measures to help that along, that could be a positive for some of the AI-related stock tech as well as utilities, I would say. The other thing that we're watching closely is regulation. Of course, we have heard former President Trump talk about this. He also recently said for every one new regulation, 10 needs to go away. Again, details are light. However, that would suggest that those highly regulated industries like financials and energy could benefit from that. And then we know that Harris, like Biden, supports a lot of the green initiatives. So those are some of the areas that we're watching and where you could see some movements, again, if some of these promises become policy, and that remains to be seen.
That's right. Thank you, Nadia. Yeah, it's true that we have to really keep our eye on the ball here as we go through the next 53 days until Election Day to see if anything changes on the campaign trail. Perhaps we'll get another debate. That remains to be seen as well. So there's a lot that we don't know, but that's why we have people like you, my colleagues in the CIO, to sit here and have these really in-depth conversations to keep everybody on track. Nadia, thanks for being here.
Anthony, before we wrap up, I have to say, we continue to encourage American citizens who are eligible to vote to get out there and vote in the ballot, but don't do it in your portfolio.
Nadia, thank you very much. And by the way, that is great advice, and it certainly bears repeating. So thanks for being here, Nadia Lovell. And thank you all very much for joining us. For more information on everything coming out of the Chief Investment Office related to the election, visit our website, ubs.com/election watch. Plus, all of the other episodes in this series are there. And of course, we really do encourage you to continue this conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great day, everyone.